Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, annuities, disability, business continuation, or final expense life insurance funding, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing the danger of using term life insurance for final expenses. Let's dive right into this. The first danger is term life insurance policies have a specific term or duration. Typically, a term life insurance policy is going to be issued like in 10-year or 15 or 20 year or 30-year policy terms. And what that means is that if you've got a 20-year term policy and you're age 50, then that policy will terminate, term insurance, terminate at age 70. Now, is that good or bad? Well, it's neither. It's just what the policy does. So let's say you're age 50 years old and you had a mortgage of $400,000 and you wanted to make sure that if you passed away in the next 20 years, the duration of your mortgage, that your mortgage would be paid off. So you could get a $400,000 term life insurance policy that would last 20 years. So one interesting aspect specifically about getting term insurance for a mortgage is, so if the mortgage is $400,000 and you get a term policy for $400,000, that will pay off the mortgage in full if you die right now. But we know as time goes on, you're going to be paying that mortgage down. So let's say at some point that mortgage is paid down to $200,000. You've still got a $400,000 term life insurance policy. Now, is that good or bad? It's neither. It just is what it is. But here's what you can do. So if something did happen, your family or member, typically your spouse or partner, you could have them be the beneficiary and you pass away unexpectedly. There's $200,000 left on the mortgage, $400,000 policy. They could take 200,000 of the life insurance benefits, pay off the mortgage. Now they've got the home paid out free and clear. And now there's $200,000 extra there to replace your income. Because remember, you're dead. You're not going to be making any more income 6 feet under, right? So as time goes on, it provides a nice little financial safety net just to maybe pay off some other bills, other expenses, just replace lost income, anything like that. So it's, you know, but here's the deal, here's the danger is that when that term insurance goes away, it's gone forever. Now, some insurance companies will let you continue on an annual basis, annually, right? To keep that insurance in place, but they're going to re-index the rates to your current age now that you're age 70, 20 years older. And in most cases, it's pretty punishing, meaning it's enough that most people can't afford to do that. And it's generally wise not to do that. In that case, you'd be better off typically shopping for a new policy, but you should be reviewing your policy every 5 years anyway. We'd probably recommend at 10 years, you review that policy and say, hey, is that going to be enough? Do I need any more insurance or anything like that? 10 or 15 years. So just kind of keep that in mind. But final expense life insurance, that's intended for expenses that happen at the end of your life. Typically, that's going to be burial, cremation, something like that. Final expense insurance really isn't designed to pay off home mortgages or anything like that. So final expense insurance can do a great job of protecting the mortgage, meaning if when you die, the house is going to be sold. What we can do with final expense insurance is just get money to make the payments on the mortgage, maybe 6-9 months, something like that. And that allows the surviving spouse, partner, family, whatever that would be, to get the home sold. And now really kind of almost the life insurance benefit is the equity in the home, because the last thing you want is for the bank to get the home and all the equity in it just because nobody had the money to make the payments. So, yeah, just even protecting the mortgage payments sometimes when we're older is really nice because you're protecting a small amount to get that equity, which could be a huge amount. So, the other danger of using term life insurance for final expenses is that if you outlive the term policy, you don't get any coverage. So, if you get a 20-year policy and you live 20 years in one day, that policy's gone and you're not going to get any money from that. But typically, that's why we always recommend having some whole life insurance in place in a smaller amount just to cover your final expenses. Because that way, if you live one day or another 30 years, family's still going to be protected. And whole life insurance means it's going to cover your whole life all the way up until age 121. Term's going to last for a specific period of time, then it's going to terminate. The other danger of using term life insurance for final expenses is renewing term policies can be expensive, especially now that you're older and you have more health issues, and that just makes it less practical for covering final expenses. The good news is the whole life insurance we use for final expense, burial, cremation insurance, it's got very forgiving underwriting. Means you can have a lot of health problems and still get approved for first day coverage. Now, if it's something significant like you got a terminal illness and you're going to die in the next 12 months, or dementia, or dialysis, or you're in a hospital or in a nursing home, that's a different story. But don't wait that long to get this insurance, and that won't be a problem. The other danger of using term life insurance for final expenses is that converting a term policy to a permanent policy may be an option, but it can also be expensive and require additional underwriting. A lot of times it wouldn't. It's just not every single policy is set up to convert a portion of the term policy to permanent whole life insurance. If you do, it can be a nice option, but just when you're shopping around, make sure that your agent sets it up that way for you. But if you've had your policy 5, 10 years, you don't have that option of going back and ticking off that box or anything. The other danger of using term life insurance for final expenses is term policies usually have a maximum age limit for coverage. Generally, that's around age 80. So if you're age 60 years old, you could not get a 30-year policy with really, I don't think any company, because that would put you to age 90. They just don't do that. That's not how they roll. But you could get a 20-year policy, right? That would put you age 60, and a 20-year policy would go up to age 80. But if you're 60 years old and 3 months, you couldn't get a 20-year policy with most companies because that would put you over age 80. You'd have to go down to like a 15-year policy. So just understand it's different with each insurance company out there, and you're going to have to qualify medically. Term life insurance is much more um, stringent on the underwriting than whole life policies. So keep that in mind. Term life insurance has a place, but for, not really in final expenses. The other thing is there's companies out there that offer term life insurance that will go up in price every 5 years. That's typically that stuff you see that's going to be advertised as, hey, your first payment is only $1. Well, you know what? If they're using teaser rates, which teaser rates are something that sounds too good to be true. What they really are intending to do in most cases is get your information, get you into their marketing funnel, and then sell you insurance. And that dollar a month for your first premium is going to come. It's called 5-year age banded, which means every 5 years your price is going to go up. And typically every birthday that ends with a 1 or a 6, so like age 71, age 76, the price is going to go up. And the challenge with those policies is that they just get more expensive over time, and they often get so much more expensive people have to cancel them. And people would have been better off just getting a whole life insurance that was a little bit more expensive at first, but the rates are locked in for the rest of your life. And what happens is if you go with the term life insurance policy and the price goes up every 5 years, then in most cases, people have to cancel that insurance because it gets so expensive. And then the insurance company gets to keep all of your money. It's been nothing but sheer profit to them. and they'll never have to pay a penny out on that. So they win, you lose, and now you don't have any insurance. So we just don't recommend those policies. And then also they have age limits. So if you do live beyond a certain age, typically after age 80, those plans are going to cancel, and then they're going to keep all that money. And that's why initially the premiums are less, because those plans rarely pay out for most people. So, in closing, final expense policies are typically smaller, they're more affordable, they're not meant to pay mortgages off or replace hundreds of thousands of dollars worth of income, or, get enough coverage to put the kids through college or anything like that. They're really designed to pay for your final expenses, burial, cremation, anything like that. And maybe in some cases, some extra bills, credit card bills, medical bills, or something like that. Typically, we don't recommend these policies for leaving extra money behind for kids. Just spend that money that you would have spent on premiums to get the increased coverage, and spend it on your kids and family members while you're alive, so that you can have those memories while you're here, and they'll have those memories for the rest of their life. The other thing too is final expense policies are designed to cover burial, funeral, cremation costs. That's exactly their whole purpose in life, is to make sure that your family members, loved ones, or children don't have to pay these expenses for you. Term life insurance, not always the case. So you just be a smart, educated consumer. I think you're probably miles ahead after just listening to this podcast. But I hope this podcast has been helpful to you. My name is Randy Vandervate, and Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.